If you look at all the warning signs, there is infinite money now. I think it's really hard for a country to sneakily buy Bitcoin, even though they should. I would have thought that the ETFs opening the floodgates combined with strategy would have gotten us there already. And this is why I'm one of the believers that there is paper Bitcoin out there dampening the market. But, nothing stops the train. It's going to go. The dollar is going to keep on inflating and Bitcoin is going to keep going up. It's just a question of when it all converges. If you look at the Bitcoin treasury companies like Strategy, they're borrowing at 0%. Right? They're effectively tapping into the infinite money out there and converting it to Bitcoin. There's just a massive amount of insatiable demand, and the demand is only going to go up.
As crypto holders prepare for a massive November, and major companies like Michael Saylor's firm, MicroStrategy, continue buying, investors are growing increasingly bullish heading into the final months of 2025. However, Samson Mow has issued a warning to all Bitcoin and crypto holders, saying the recent sell-off is only the beginning. According to Mow, a coming Bitcoin tsunami will change the crypto landscape forever. He also discusses what he sees as the inevitable collapse of the fiat monetary system and claims there is a coordinated plan to take over Bitcoin and the broader crypto market. With BlackRock among the largest players entering the space, Mao suggests that this might soon be the least of our concerns, as entire nations are now pursuing Bitcoin. With Bitcoin's current price sitting just over $110,000, still down over 7% in the past month, Mao argues that it's more crucial than ever for nation-states to adopt Bitcoin and integrate it into the global economy before the existing financial system collapses. In this latest interview, he shares his predictions for Bitcoin's trajectory in the coming months and explains why he believes a massive surge of capital is about to flow into the crypto space. Drop your comments down below and subscribe if you enjoy the content we do here.
I think the 80,000 coins that were market sold is a good indicator that the market doesn't care about anything now. There's just too much power behind accumulation, whether it's Strategy or other Bitcoin treasury companies or hodlers or ETF buyers too. There's just a massive amount of insatiable demand, and the demand is only going to go up.
Saylor's price prediction, 21 years from now, a $21 million coin. That's 80 some odd $1,000 a month on average in price appreciation. So for you to wrap your mind around, do you think that that's possible?
No, I think it's fully possible. I mean, that's like an Omega candle every month or so. And that's in line with my prediction that we're going to go to 1 million fast. See, even Saylor thinks so. If you say his prediction, if you take his prediction, that is like 10 Omega candles a year, right? And that's 1 million in a year. Anything else is utter, unspeakable $1 million candle in a year or a $2 million candle in 2 years, and then rapid ascension upwards. And that's all in line with Max Payne theory. So I agree.
Yeah.
That what he just quantified it in numbers, 21, 21, 21, but I've quantified it in words with Omega candles and Max Payne theory. But it's the same packaged differently.
I think of Saylor talking about all currencies collapsing into the dollar, all properties collapsing into Bitcoin. What are the positives with stablecoins, and what are the concerns that we should have, if any?
Well, I think it's a bit of a hot topic. A lot of Bitcoiners don't like stablecoins. They're saying you should just be Bitcoin only. But I don't think that's a reality that we can hope for and expect, because a lot of people in the world still are looking for dollar-denominated value, like stablecoins, if not the US dollar, because in many places in the world, it's actually very hard to get dollars, either in your bank account or physical cash. And I think this is why people are turning to things like Tether. Tether's completing the last mile. They're reaching the people that want dollars, but can't get dollars necessarily. And I think it's simply a supply and demand thing. In a perfect world, everyone would understand Bitcoin and everyone would just want Bitcoin, not today, but yesterday. Maybe not even yesterday, like 2-3 years ago, right? That's the perfect world. But the world is not perfect. And people's understanding of the world, including Bitcoin, is not perfect. So there are people that want dollars. And I think that's a reasonable thing if they're, say, living in Venezuela or Argentina and their own currencies are hyperinflating. They're looking for something that is stable for them, not necessarily for us as Bitcoiners, but it's stable relative to their own local currency. And that's why they're looking for this dollar value. Until the world reaches a full understanding of Bitcoin, you'll still have people seeking out dollar value because it is better than what they have. And a lot of debts are also dollar denominated too. So suppliers go up the supply chain, people want dollars. So if you're doing business, you're a merchant or something, you have to pay and settle in dollars. And Bitcoin still is volatile, right? As it becomes the next reserve currency of the world, there will be ups and downs. So a lot of these people can't weather that volatility too. So even if they did understand Bitcoin, they cannot go all into Bitcoin. They might allocate something to Bitcoin, but they still want that dollar value because their debts are dollar denominated. So I think for us as a Jan 3 and the developer of Aqua, we've kind of accepted that and we understand that people want stablecoins. They want dollar value. So we put Tether front and center in the app alongside Bitcoin and layer 2 Bitcoin so that they can transact. They can send Tether out to other chains, but they're holding liquid Tether on the liquid sidechain. So it's better in a number of ways. But you can still interact and interface with that entire digital dollar economy in your country. But you see Bitcoin there, you see the Bitcoin price, and you might think, okay, maybe I'll swap some into Bitcoin. And that's kind of the hope we have, that we tap into the 400, 500 million Tether users and get more of them into Bitcoin. And I think we're getting there. Some of our biggest markets for Aqua are Argentina and Brazil. So we know that we built something that has good product market fit, that meets their needs and gives them some benefits, because liquid Tether transactions are cheaper and private actually. And you maintain your privacy. But overall, I think we're not going to see stablecoins disappear.
Mao asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. He also acknowledges that BlackRock's recent entry into Bitcoin will transform the crypto landscape as we know it, as more institutional investors pour in. This dramatic increase in capital will drive Bitcoin's price significantly higher, like we saw in the halving. Mao highlights this being a significant development in the financial ecosystem. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value, and crypto will be the best performing asset of them all.
You probably have a bank account, right, Eric? You have a bank account?
Totally. Yes.
Yeah. So you're kind of speaking about this topic from a position of power and luxury, where a lot of people just don't have a bank account, but they want dollars. So what do you do in that case, right? So I think stablecoins definitely serve an important market. And there have been criticisms too of, you mentioned it earlier, like stablecoins are a CBDC, but it's not really a CBDC definitionally because it's not from the central bank, right? You still have that extra step. And I think the resistance towards the CBDC is that the central bank, which in a lot of cases is just an arm of the government, they can just shut you off because of political dissent, whereby as long as there is one step of separation, technically you're still protected by the law and the full extent that the law couldn't protect you. And laws are still variable too and malleable, as we see in Canada, right? Like when we had the freedom convoy and the protests, the government just said, okay, everyone protesting the COVID vaccine is a terrorist now, and yeah, we can freeze your account. But at least they had to do that and take that step, and ultimately that cost them reputationally and credibility in terms of credibility. But they had to take that step, and they had to force the banks, not the central bank, because central bank would just do it anyways. They don't need to do anything, right? They just pick up the phone and say, hey, cut off Eric, and then you're gone. But they have to take some step, enforce the Emergencies Act, the martial law, and then contact your bank and then deplatform you. So at least there's still that separation. And in this centralized world, I mean, that's probably the best protection you're going to get. You're never going to get a bulletproof bank account, right? It's still centralized, and that's why we have Bitcoin. But it is not definitionally a CBDC. The other thing I think people miss is that there is market demand for a stablecoin, and that market demand will be met. And the question is, who meets that demand? And I think we're very fortunate as Bitcoiners that you have a Bitcoiner, Paulo Arduino, that is, the CEO of Tether, and he is a Bitcoiner through and through. And Tether is accumulating Bitcoin, massive amounts of Bitcoin. They're investing in the Bitcoin ecosystem. They're bringing USDT to Lightning and to RGB potentially too. So they're doing a lot of interesting things for Bitcoin, and they are very much like advocating for Bitcoin. And the alternative would be somebody like Circle, that is the dominant stablecoin provider. And Jeremy doesn't like Bitcoin. He's said in the past, no one will use Bitcoin in 5 years. Like he said that 10 years ago or something like that. But, it'd be like, I mean, Circle is basically Coinbase, right? So it's like Coinbase and Brian Armstrong with the dominant stablecoin, using that to promote Ethereum in some ways. But, you can say you don't like it, but it will exist. There is market demand. So the question is, who is meeting that demand? And we're fortunate that Tether won out that race, and they're the dominant player now.
So the price is set at the margin. We have, I believe, somewhere around 2 million coins are on exchanges. Is there any way to know out of those 2 million coins, and is that accurate? Is that an inaccurate number?
I mean, it's an estimate.
It's an estimate.
I think it's a fair estimate.
Does that include coins that people hold, like they technically own, like, customers who haven't taken self-custody of their Bitcoin? So that 2 million is technically not all for sale.
Yeah, it's not all for sale. I think it's definitely, it's a mix of exchange-owned coins and also holdings from people on exchanges. A lot of people have, or a lot of hedge funds and I guess trading firms keep funds on exchanges for, liquidity provisioning and trading.
Because I feel like there's a lot of capital that could come into Bitcoin pretty quickly. Do you have any estimates around that?
Hard to say. I think we should have been here already. So
Yeah.
I would have thought that the ETFs opening the floodgates combined with strategy would have gotten us there already. And this is why I'm one of the believers that there is paper Bitcoin out there dampening the market. So we'll see. But, nothing stops the train. It's going to go. The dollar is going to keep on inflating and Bitcoin is going to keep going up. It's just a question of when it all converges.
Samson Mow foresees a looming economic catastrophe driven by collapsing fiat money systems, rampant inflation, and bank failures. He suggests transitioning to a Bitcoin standard as the world grapples with the impending crisis. He asserts that the promises made by the central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, this will not lead to a return to the status quo. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, this journey is just the beginning. Comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mow asserts this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. That established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about Samson Mow's prediction for Bitcoin? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.